Hello and happy Tuesday, May 12th. Welcome to another exciting edition of Rate Desk. I'm your host, Michael Thomas, here to talk about multifamily interest rates, among other news. First, let's go to the markets. The major indices were down today from their previously higher opens, but the good news is crude oil broke through the $25 barrel range on futures. That's good to see. And the U.S. Treasury had a huge auction of 10-year notes. 32 billion with a B of 10-year notes were auctioned, and they were traded at 70.70. It is the biggest auction of the 10-year, and it is also the lowest yield auction that was ever held. So otherwise, very successful auction. Very interesting to see that. For everybody else throughout the trading day, the U.S. 10-year Treasury yield did trend down, closing at around 67.67. Okay, so in other news, the 223F interest rate today still trading within that 250, maybe to 255 range. That's on the 223F HUD FHA rate. We go into the 40-year, and that's still trading in and around the 315 to 320 range. Agencies are flat to yesterday. No change there. We're still looking at a DUS interest rate at around 10-year fixed for about 320. And then on the Freddie Mac interest rate, we are looking at a rate there in the range of 320 to 335. So nothing major in terms of movement on the agency markets. In other news, here's what I want to talk with you about today. A couple different topics. One, what is your best next alternative? That is a question that I think is very important for all of us to answer. And it came up for me today on a call with some clients thinking about other loan options. And I think it's a fantastic question to ask about even your housing developments. So if you're looking at it from a tenant perspective and you're looking at a certain product type or a certain market, ask yourself in that primary market area, what is their next best alternative to whatever housing you're proposing? I think these kinds of questions can really fill out, if you will, and harden what our approach to solving any particular problem may be. If we know what the next best alternative really is thoroughly, we can definitely speak to the strengths of what the solution is we are proposing. Consequently, maybe you'll find some holes in your current proposal and say, hey, maybe that's not the best way. Case in point, traveling. Okay, we all know traveling is a little crazy right now. I am planning a trip. I've already planned it to go to Florida. I was looking into Florida hotels. There were some strange reviews, as you might imagine. People are not populating these hotels very much. Therefore, hotels don't need the staff as much. Therefore, going there can be a little strange. You're not going to get the service. Maybe cleanliness is a challenge. I don't know. But it did drive me in another direction. What is my next best alternative? Traditionally, I'm not a big VRBO, Airbnb person, but I found that option right now is actually very viable. Why is that? Well, those are very controlled spaces. They're not trying to control 300 doors and keys, right? They're controlling a unit, a specific unit. That unit can be controlled and cleaned and kept efficient. Very interesting to think about in these times. Next thing I want to just bring up, food for thought today, negative interest rates. Okay, I'm going to have somebody on in a future episode that explains this in plain English, okay? I know that other countries do it. Germany does it. France does it. They both have 10-year bonds that have negative yields on them. But I still don't understand. Explain that to me in plain English, okay? I'm a lender. Does that mean I have to pay a borrower to take a loan? Because that's what negative means to me. Anyway, it's an interesting topic. It seems to be one of political debate right now. I'd like to just, from an intellectual perspective, here's some more perspectives on that topic in particular, because I find it very interesting. So I'm going to end the episode on that note today. Thank you for tuning in, and I look forward to seeing you back at another episode. This has been an edition of Rate Desk. I am your host, Michael Thomas, signing off.